Hi, everyone. This is Jason Burack of Wall Street from Main Street, an independent financial journalist and managing editor of the News Doctor's Eric Dubin. Welcome back for another Welcome to Dystopia podcast. This is episode number 19. Today's special guest is Bill Murphy. He has decades as a commodity trader. He co-founded GATA, the Gold Antitrust Action Committee, and he's also president of GATA, and he writes the newsletter for Le Metropole Cafe. Bill, thank you for coming back.
Great to be here, you guys. Thanks for asking me.
Yeah, and I just want to congratulate GATA, you and GATA, Bill, because you guys have been doing this for, almost 2 decades now, trying to stress to people that there is manipulation in the gold and silver market. And, now we're starting to see some banks, whether Deutsche Bank and hopefully more to follow, that there's going to be, solid evidence of this coming out.
Yeah, well, obviously, I guess they got them where it counts when it comes to evidence in terms of this lawsuit against Deutsche Bank, whose part of their agreement was to turn on the other banks. And so it's just a tip of the iceberg, but you got to start someplace, and it's great to see it, to get it out in the public domain that it's not only silver now, it's gold. That they've been a lawsuit against them and against Deutsche Bank, a settlement there too. So it's just getting started, but you got to start someplace, and it's good to see. And for all our critics, you think if they had any class at all, they'd say, we were wrong about this. And, of course, it's just one aspect of the manipulation, but it shows in just a beginning way how right we've been for 17 years.
Yeah, very much true. And it's also important to point out that this is primarily focused on the silver and the gold fix in London. And it's not unlike, we've seen a number of headlines over the weekend and people getting really, really enthusiastic about this being the end. Manipulation coming to an end is now clearly in sight. And unfortunately, that couldn't be further from the truth, because the silver fix, the gold fix, the process by which those things are established in London have always been, though important in terms of making manipulation happen and the gears by which it is executed. It's a small portion of the toolkit that the cartel uses to manipulate. The bigger guns are the HFTC trading, the ability to just, like last week, constantly issue new contracts over on the COMEX to sop up all of the rising momentum, and then we have this wash, rinse, repeat cycle with whenever momentum kind of fades, the cartel would push the prices down and try to balance out their short position book by covering some of the shorts that they would issue when they dump tons of new contracts in. And then you get the physical gold dumping, like the textbook example, April 2013, that fateful Friday going into the next week, tax season and all that, and upwards of 400 metric tons of notional value of gold was dumped on that Friday through Sunday morning, and a huge portion of that was rumored to be physical. So, we're not out of the woods yet, and love to get your take on all of, the context that this news comes. So what do you think as far as what's going on, as far as, the importance and significance of the news?
I have a tough time following up on that act of yours, because that was spot on the way you said it, Eric, and unfortunately, the game's still on, but I do think it's changing. It's a process, and I think we're getting closer and closer to a tipping point in which the bad guys, this gold cartel, which is the bullion banks, the U.S. government, the Fed Treasury, the Bank for International Settlements, other central banks, and so on, bullion banks, are finally getting into this area where they're having trouble. And, of course, you've had gold trade totally different this year, even though it has, I think, for 17 years, and the way it's come back out of nowhere. They've attacked, and they've just done it again, taking gold $50, $60 off its high. But it seems like gold can take off out of nowhere, meaning that physical market is firming up. And then you've got, of course, the shares, which have gone ballistic, and they continue to just go up and up and up, acting very different than they have for many years, in which they corrected time and time and time again. This time, people waiting for corrections are left out. And third, and potentially maybe the most important from my standpoint, is what silver's traded the past week. You've got J.P. Morgan selling and selling and selling. The open interest is going berserk again. It's only 8,000 contracts from its all-time high, around 192,000. It's so-called, they call them commercial. It's the gold cartel, and Morgan and their friends selling and selling. And somebody's really taking them on. And normally, the guys that take them on, the way it's been for 5 years, get slaughtered. It's happened every single time. I mean, every single time. And you know it better than me. But this time, so far, silver's acted, one much better against gold the past week. Started to break out on Friday afternoon. They said, no, but they haven't hit it yet like they always do. Now, maybe that's going to come in tomorrow. And, that's the one thing about this market from an analysis standpoint. How do you do it when you've got, they change the rules, change the game? Okay, silver's going down 70 cents tomorrow, and it's done. And that's 40 and 50 cents has been the number every single time.
Yeah.
Every time silver has rallied the past year, I think 7 times in a row, within a day or two, or the next day, straight back down again. Every time. This time it hasn't happened. Will it? I don't know. But if they're hitting the wall in terms of physical supply, and perhaps the big spot buy of $86 million worth of silver was a tipping point, I don't know. But we have a shot here. But if it's going to happen, silver's got to take out 1650 very quickly. And then, boy, we could have some serious excitement. Maybe it means that they're in trouble.
Yeah, Bill, you mentioned the Sprott purchase for the Sprott Physical Silver Trust. The commitment of traders was turning bearish, and then the Sprott purchase is announced. It seemed, that was pretty good timing from Sprott in order to try to counter that and, make the physical market even tighter. Do you think that that's what's helping to put like a stronger bottom in for silver so the price isn't knocked down as much then?
Oh, good point, Jason. Again, going back to my thing about a tipping point. At some point, we don't know where they're getting the physical silver to keep the price down. And I've talked, to smartest guys going in this world, David Morgan and Eric Sprott and John Embry and people like this, and they don't know. They haven't known. And at some point, they're going to hit that wall when they can't get it. And maybe the Sprott purchase has done it. We don't know, but it could be, and maybe people know what's coming. You take some of these silver stocks, like First Majestic, it just goes straight up. It's going from 240 to 858. I mean, without any kind of decent correction. And
most of the large cap ones in the silver space have been doing that as well. I mean, this is just a sector-wide move. People are positioning to go for the long term here.
Yeah. There's big money Wall Street guys who had no exposure to gold and silver who have started to move capital into there. And you could see that in the price action, like you said, in the shares. They're not having these enormous corrections. The dip is being bought. This reminds me, a lot of 2009, 2010, where the miners, any little correction, they were bought very heavily.
Well, good point. And is it telling us that something big is coming here? And the potential of it, of course, is extraordinary. And you've got La La Land and the Dow, which hit 18,000 again today, the first time in about 10 months. And it's all, I use the Stepford Wives comparison with that great line. Everything is fine. And, they go party. I mean, and it's just extraordinary what could be going on behind the scenes and set up. But so far, there's nothing on the radar that suggests this. But except from my standpoint, what silver has done, which, I'm watching it every day, all day for all these years, it's finally, giving it maybe some kind of signal on the radar screen that things have changed. And we don't know. But as you said, the share buying suggests something big is coming, or a lot of big money out there believes that it is.
I think the other news story for the silver market, Bill, is that these copper and base metal miners, the copper price over the last 15 or 20 years, it went from at one point 50 cents a pound to $4 a pound. The copper price has been more than halved basically in the last year and a half, 2 years. And that was a lot of silver byproduct that was brought online, during that span. That was an enormous amount of silver supply that was added. Now you have the investment banks like Societe Generale or SocGen saying that, the annual silver supply is going to go down a lot in the next 2 years. You have people reading that and saying, well, that's bullish long-term for silver. So you have people positioning themselves, expecting the silver supply to drop in the next couple of years. And those estimates from SocGen, if we have a lot of bankruptcy of copper miners and base metals, those estimates of silver supply falling could be conservative.
Well, again, another good point. And, when you take a look at the price of silver relative to gold and what it's done, it's honestly, it's a joke. I mean, I'd call it, they put it like in a penalty box down here with an anchor around it. I mean, $16 silver? I mean, and Eric follows this well and on a daily basis, and it doesn't even trade half the time in terms of what it does. It just sits there, and from my standpoint, just an opinion, they're petrified of losing control of silver because it's like their kryptonite. And if the gold cartel loses control of silver, I mean, who knows what can happen. And my opinion is that if silver starts to go and takes out 1850, it's going to go ballistic. I mean, this kind of numbers today for the price of silver it's unbelievable how artificially low they are and what it's going to lead to. Now we'll see if it happens, and I'm hoping by what we've seen the past week that there's a real shot for that. But people are going to be absolutely stunned when they lose control of the silver price.
Let's talk about that in the context of 1850 and what was going on last week, because I mean the stuff that you were publishing in Electrical Cafe's Midas report is spot on, and the significance of $16.35, 38 cents, give or take. I mean, as soon as we got anywhere near that last Friday, we were struggling the whole time to get over that level, because it would have been a technical signal that would have further added gasoline to the fire of the momentum chasers that are moving into silver right now. Bam! Cartel steps up, pushes it back down. And then going into the Sunday trade, even though we had this, wonderful accumulation over the course of last week and about as positive of a news background as you could possibly imagine, manipulation being confirmed and so on and so forth, Fed meetings set on emergency schedules and on and on. Here we are, we go into the Sunday trade, and, first gold's tapped a little bit, but then gold managed to, hold on in spite of its being assaulted and just kind of go sideways through most of the evening and morning hours through Hong Kong, and then boom, right before London opens, they managed to get gold down. But all the while, despite that almost picture perfect accumulation of silver going on last week that should have in any normal market seen continuation through this week, it was attacked. And you can just see it in the chart. I mean, while gold was able to go somewhat horizontal, silver was brought down all the way just below $16.10 from, the Friday spike high of almost $16.38 on an intraday basis. It was maybe in a penny or two higher. So what do you think about, how the cartel is able to paint psychology with this never-ending tape painting that they do?
Well, again, it's just extraordinary to see. You've nailed it here. That's exactly the way it is. And the question is whether, again, go back to that same, line about a tipping point. Are we there when they just can't do it? What the heck is going on with the people taking them on in this open interest? And I just don't know. And quite frankly, no one knows. We should have taken off today, but we never do when we're supposed to. I think it's just going to happen out of nowhere when the word's going to get out. But I mean, you've got the classic setup right now for what they've done for 5 years for silver to get slaughtered. Now, however, if we finally go to that point when they can't do it anywhere and it's a game changer, that's when you got to have that commercial signal failure, as I call it, and it comes in 30 to 40 cents higher and just takes off. And it's a whole new world for the silver people.
Now, Bill, I also want to ask you back to the Deutsche Bank story. They haven't named any American banks yet. It seems, the regulators in other countries are going to be the ones pursuing this more. Maybe, there will be some U.S. regulators that go after this. But were you surprised that Deutsche Bank hasn't named any U.S. banks involved in this manipulation?
Well, talk about frustration. Many of you know the story. That GATA's been to the CFTC. I'm one of the few people that's met Bart Shelton. He's a good guy, actually, and we testified in front of the CFTC about what was going on, and they'll go through a 5-year investigation about the manipulation of the silver market on the COMEX United States. And this is at a time when the bullion banks and other people, when everybody involved in the energy market, the mortgage market, the interest rate market, the currency markets, the whole market, they've all been found guilty of price rigging and fined, I think Morgan alone was fined like $30 billion. And
it's ridiculous.
Billions in every single market there was wrongdoing. Every single market but the silver market.
And to put
That's
that 30
how big
billion
this is.
to put
Pardon?
that 30 billion in context, I mean, when you chuck around numbers that big, people don't necessarily wrap their hands around it pretty easily. I mean, that's more than what J.P. Morgan typically reports in net income in an annual basis. I mean, in terms of the cost of doing business, their malfeasance cost them more than what they make in an average year for net income. I mean, that's how big these crimes are, and the financial media just kind of yawns.
Well, marching orders, right?
And I mean, Goldman Sachs was just fined $5 billion. How many of their people went to jail for their wrongdoing?
Yeah, big fat zero.
None. You don't have anybody named for anything on all those crimes I was just talking about. Nobody was named or going to be brought to justice. So there's no rule of law when it comes to this stuff in the United States. It's going to take, I think in poor Bart Chilton, they said, listen, you stop talking about this or you'll never get a job again. And he's got a 5-year-old daughter, and did back then. And, he had to shut up or that's it. So
yeah, he actually got hired by Wall Street. He's a high-frequency trader lobbyist now. He switched to the other side, even though he said high-frequency trading manipulates markets.
Yeah, well,
when he was
again, he learned after trying to do the right thing that if you want to have a job, you can't do it. So the markets, there's again no rule of law. It's good. Silver's going to have to blow up for this all to come to light. And do I think it will down the road? Yes, but only when the other markets go in the tank. If gold and silver are going bananas, and the stock market's gone, the people's money is gone, they're going to want answers, and they're going to say, How could this have happened? That famous line. How could this have happened? And we're just going to raise my hand and say, I'll tell you how it happened.
Well, things almost blew up at the end of last year because we were at paper prices in U.S. dollar terms for gold and silver, where if they had gone much lower, the gold and silver miners, a lot of the primary ones, had really bad balance sheets. Yes, some of them did have, cheap oil improving their margins. Yes, some of them were operating, in emerging market currencies, but their balance sheets were still so bad that had we had silver, break 13 and go down to $11, $10, $11, $12, gold go way below 1075, you were looking at, defaults and some major supply shutdowns. So we almost hit that level then. I think, the people in power realized this, that, they couldn't knock the price that much down without almost destroying the physical market and hurting their, marginal supply, which is the mining supply is like hand to mouth for the market. Basically, almost all the mining supply that's brought up is spoken for. We know this with the Shanghai Gold Exchange withdrawal numbers, that almost all the annual gold mining supply, right, is already spoken for by the Chinese every year.
Yeah, and it's important also that if they went that far, you could easily see the system completely break down such that they would not be able to manipulate any further. And that's really why.
And that's their worst nightmare.
Yeah. And I think that's where we are now because, now we're at 16 plus for silver and gold and, trying to get out of the 1200s and so forth. That's why there's been the shift in psychology after a 4+ year bear market and people recognizing that it just cannot go down any further because you're getting to the point where you're going to kill so much forward mine supply that the manipulation game couldn't even continue on because, physical is necessary around the edges to make this whole manipulation card, house of cards stand.
Well, that's right, because people say, well, it's the paper market. Well, at the end of the day, we talked about the fixes in London.
Yeah.
There's physical pricing done every day in those two markets. And if the paper market was, it's affected the physical market incredibly over the years. If, in fact, it was too out of order on a short-term basis, it would not be able to stay down there. It just, the supply wouldn't be there to meet the demand. That's just a fact of life. Much as a lot of people like to say, well, it's, there's two different markets. Well, there is to it in the way, again, as I mentioned, where the paper market affects it and the psychology and what it's done over a period of time. But day-to-day basis, you've got supply meets demand, and there's a price, and it's arranged at these fixes. So we need the physical markets to carry the bad guys out.
Yeah,
and honestly, we could be very close to that point, and that's not just throwing it against the wall. We've seen a number of signs of that.
And people get confused a lot about this whole interface between the physical and why it's important with the overwhelming manipulation taking place with paper. And one of the things that people need to remember is that these futures markets like the LBMA, are supposed to form a function and serve a function of, intermediation between the miners producing the product, bringing it to market, and then the speculators on the other side are part of what a market does in terms of price discovery to help, facilitate the movement of physical with a necessary element of paper pushing. I mean, that's what a normal futures market is supposed to do. You need the speculation. You need the speculators moving paper to have price discovery. But the creatures that we have today are so far from what is a typical and conventional futures market that the process breaks down. And then, if miners are not able to deliver their product at a price that ends up, making them able to function as miners, that's where the system breaks down, at least one of the ways in which the system can break down. And that's where we are right now, frankly, in my opinion. And I think that's part of why we're seeing what looks like an effort to execute what is a managed retreat, as you've described all these years.
Well, yeah, that's right.
And it's early stages, it's not totally here, but you can see the first outlines of it.
Well, we've had the cyclical bear market was from 2011 to basically the end of 2015, I guess, and then we've restarted the bull market again, I guess, in early 2016. But, during that time, there was so much exploration shut off, so many future mine production was also shut off. Now, in some countries where the gold and silver price in the currency was higher, they increased production, but there was a lot of future mines that were shut off. And what most people don't understand is how much depletion, how much, gold and silver was pulled out of the ground each year, that 5 to 7 years later, a lot of that mine, maybe the company's lucky to replace some of those lost reserves, but eventually those reserves are going to have to be replaced at a much higher price. That's just how things have worked. We get a lot of listener questions all the time. It comes up every couple months, like, oh, how come, gold and silver miners, how come silver miners can't be profitable at $4 an ounce silver anymore? And the answer is there is no more profitable all-in sustaining cost $4 an ounce silver anymore from mines. All that, the last 15 years, all that silver that was remotely profitable at $4 an ounce, that's gone. It's been consumed,
100%
being recycled.
gone.
Well, it's been gone out of the ground.
Yeah.
There's most all-in sustaining, a cheap silver mine now, you're lucky to produce for $10 to $14 an ounce now. That's cheap. Whereas, 10 or 15 years ago, that was a high-cost mine. So, and $3 or $4 an ounce was cheap. So the mining industry, 10, 15 years, every couple decades, the grades go down, the costs go up. This is just how mining works, guys. The textbooks say that the cost should drop every couple decades, but that's not reality for the miners.
Well,
Bill, now...
Go ahead.
Yeah, Bill, I want to ask you, we're getting listener comments and questions about the yuan gold fix going in this week. I'm wondering if you think it's going to have any big deal. You've had conference calls with the Chinese about GATA and the gold price manipulation. Do you think China wants to go to a gold-backed RMB, or is their goal really to just keep the gold price down enough so they can keep accumulating as much cheap gold as possible?
Well, there's a lot of people out there that know a lot more about this than I do. I mean, I just know that the Chinese know what's been going on here, what the United States has done about the artificially low prices in gold, that the Western central banks don't have anywhere near the gold they say they have. That hasn't been discussed in years now, but a lot of it just gone. It's been leased out or sold. Just recently, we had a follower of ours ask Bill Dudley, the head of the New York Fed, about whether the United States has swapped gold with other foreign countries or central banks over the last 20 years and sold it, and he refused to answer the question. He didn't say no, he just wouldn't answer I'm not going to answer that question. And by not doing so, he answered it. So the gold's not there anymore, and the Chinese know this, and I know that they're doing all they can to have as much gold as possible to back what they're doing, and knowing that we don't have what we say we have, at least that's my opinion. They're going all in, to do what they can to get there. Now, when they're going to change, whether they're helping to keep the price down so they can buy more, I have no clue. Are they doing something significant, I think, down the road with the Shanghai Gold Exchange, which starts tomorrow? Absolutely. And they know what they're doing here and what's going on. And eventually, it's going to that exchange ought to make it harder, much more difficult for the bad guys to do what they've been doing in our market because of the arbitrage things that will come up. And, the price is going to be something there. And if it's going to be glaring, and they just won't be able to continue doing what they're doing. And this may be part of the reason that gold's acted so much better this year, because they've known way ahead of time what's coming here in terms of tomorrow's opening.
And it's going to be a process. It's not going to be some
That's right.
major revelation over the course of this coming week that things are going to change. And then I'm saying
silver?
that in part because a lot of people in our audience would possibly take the interpretation of the more hype-style headlines that are making the rounds over the internet. This is definitely going to be a process. It's not going to change things overnight.
Yeah,
That's
there's certain websites and market prognosticators that are saying like silver is going to go to $50 in a matter of weeks or months, and we're going to have triple-digit silver in a year or two. A year or two
maybe. You can count me in that hype camp. but it's going to take time.
Well, I think we will eventually get back to $50 silver. I mean, $50 silver, if you think about it, that's not even what the inflation-adjusted high should be.
Yeah.
Bill, you've talked about this in the past. For us to really have a high in gold, it has to be above 2,300.
Yeah, and we spoke about that years ago. We probably make it 2,600 or 2,700 now. I mean,
because I keep reading articles in the mainstream that it's not a good, from regular Wall Street Keynesian types, that it's not a good time to buy gold because gold's overvalued, and I keep thinking that what you said years ago, that gold's not even to its 1980 inflation-adjusted high because of manipulation. It's not even kept up with the real inflation rate.
And that's using CPI.
Well, yeah, it's understated. Yeah, it should be even higher than that. Yeah.
But that's so important for people to understand because now is such a good time to be getting involved in the gold market, and what Eric's talking about in silver. I mean, it's almost. I think it's going to be one of the greatest returns of all time, and the risk reward here is a joke. I mean, $16 silver. So what if it's 13, 14, 15? And if we're correct, it's going to take out 100, and you can pick a number on the upside. I don't know. But 50 would just get us back. You mentioned 1980, Jason. Get us back to where it was in 1980. So, $50 is in the ought to be in the bag, and what takes that out the next time, it ought to shoot for 100 fairly quickly.
Yeah, and plus the gold and silver ratio is just ridiculous. I think it's over 80-1 in favor of silver. Silver is just weak against gold. And then we talked about earlier in the interview about the potential supply problems, how a lot of silver byproducts could be offline. So there's obviously in the short term, silver, because of its industrial component, it could go down further, or the ratio could expand against gold. But, longer term, for a longer term investor, I think silver is a better buy right now than gold.
Well, exactly. You just mentioned it. It was just the other day, was it 78-1? And, you get that to norms and you can pick a number. But, I mean, it's certainly half that is reasonable. So what they've done here, as I call it, the kryptonite to keep silver under control, because they've been able to do it somehow, is just extraordinary, and I can't stress that enough. And so once, Newton's law, for every action, there's an equal and opposite reaction. Once they lose control, and I just pick a number, mine's 1850, it's going to go bonkers. And as bad as silver has traded for all these years, it's going to be that sensational on the upside.
Well, Bill, I hope the regulators, whoever's involved in these class action lawsuits, and there's going to be more of them. There was Zero Hedge reported there's a large one coming from Canada. I think there'll be more ones in the U.S. There will hopefully be some in Europe. Hopefully they will ask you and Chris Powell to go and testify against these guys, and so you guys will be able to say there's more than just the gold and silver fix going on, or hopefully some other gold and silver experts will step up if they don't ask you guys. But you guys have been leading the charge. You were, I think, the first source I found out. Ed Steer, and he directed me in 2007 when I started researching what was going on with the gold and silver market and the housing market and things like that, and then the market, and then all the markets crashed with the housing bubble.
Ed is still a director of GATA, is he not?
Yeah, Ed's one of our directors, sure.
Yeah. So you were talking to GATA and you didn't even know it.
That's right.
Well, I mean, I've been following the market now for almost a decade, but it's good now that more of this is finally coming to light. I mean, there's so many manipulations now by the banks that, if for people to say that gold and silver aren't manipulated when there's evidence now of so many things that are, it's just ridiculous.
So, Bill, without naming any names or any getting into detail that would be sensitive, has GATA, you, Chris, anybody been approached by anybody involved with these lawsuits or something similar in recent times about, getting your take and consulting with you folks about, what's going on and helping the lawyers and the plaintiffs make their case? Has there been any kind of kick in the tires around GATA, anything along those lines in recent years?
Talk about tires, they're flat. I mean, not one. There's nothing to, I mentioned kryptonite and silver, and God is a four-letter word when it comes to these people. There's
Right.
people that'll interview anybody that's in the GATA camp, but they don't want to go to GATA. It's the weirdest thing. They're just afraid of it. I guess, I don't know, as I said, it all started when I was on CNBC in February of 1999, interviewed by Ron and Sana, and that was the last time I've seen in the United States on CNBC once they heard what we had to say. And we've gone to the people like, the major press, and Chris Powell's done an incredible job of sending him documentation, this and that, and what's going on. Even just recently, Eric, as you mentioned, just sending him all the stuff about the manipulation lawsuit and the defeat by the Deutsche Bank and what it's going to mean, and response to it, nothing.
Yeah.
Zip.
Well, that's because their sponsors are the large financial companies and the banks. They're, they have to sell those stock market mutual funds and the bond funds and things like that, and they can't be talking about, how all the markets are manipulated and also that gold and silver are manipulated, how cheap they are, because Wall Street doesn't make money selling gold and silver. They make money selling.
Perfectly said. I mean, compared to what they're making in the bond market and doing deals in the stock market and the real estate markets and everything you can think of in terms of investments, what they don't make money on is gold. Gold going up is bad for business, it's bad for the banks, it's bad for the incumbent politicians. It's like cooties. So it's just the way it is, and that's why it's going to lead to this explosion coming up for people that are willing to pay attention and listen to people like yourself, Jason, and Eric, what he does with Silver Doctors. I mean, it's going to be a sensation, and you're going to have to be in it to take advantage of it. I know it's happening right now in the shares. There's a lot of our guys in our camp that have got out, and now that they're starting to run away, they don't want to pay up. It's human nature. You get out of something at 50 cents, you don't say, hey, I'm going to go buy it now at $1. No. When it gets back to 50 cents, I'll buy it. It's not going back to 50 cents. So it's happening in the shares. You see, it's all the momentum people moving in for the kill because they don't care. If they'll say, okay, it's $1.25. Oh, I'll pay it. It looks good. It's going to $5.
Yeah,
but
and
the
then
people
on
that
top
got
of
out
that,
or waiting, the guys have been around it forever and got caught in all the corrections. They don't want to jump in.
and then we got the smart money. People are just positioning for longer term, and then the conventional finance world, the Stanley Druckenmillers and all the others are coming into the market for the first time in half a decade because they recognize that we are in an end game scenario. The global macro scenario going forward is such that the Fed is screwed. Their backs are against the wall, and no matter what they do, it's going to be a positive scenario for precious metals because if they do try to raise interest rates, that can conceivably just bring down financial stress into the market, so the shadow banking system rolls over and then they get stuck and then they have to reflate the system, and that's a positive for gold. If they acquiesce to the economic reality of the statistics that are just on an ongoing basis. Even today, we just got the latest report out of China for their containerized shipping index, and it's just plummeting new lows, and that reflects a global economy that's rolling over. I mean, this is not something that's a hypothetical. The global economy is weak, and then the only camouflaging of it is just a statistical manufacture of the U.S. government statistics. So, I think that's really part of what's going on. People recognize, and an increasing percentage of people as well, that things are changing and that the 4+ year bear market in precious metals has come to an end. It's going to take a while for people to continue to move in and overcome the cartel constantly trying to cap stuff and do a managed retreat. But I think we're in that managed retreat process.
Well, simplistically, for a lot of your listeners, it may be easy to understand that you've had quantitative easing in the United States, Japan, Europe, all over the place, and the stock markets have worked their way back up. But as you mentioned, the real economies aren't doing what they were supposed to be doing. They're not igniting. They're not going. This is after years of doing this. Meanwhile, gold and silver during this whole time have crashed because of what they've done. Like I said, they sold 2 years ago. They sold 400 tons and dropped the price over $200 in a few days of the gold price. So these are artificially low prices. A lot of these other prices are artificially high prices. So this is going to, when the whole thing changes, think of it like a pendulum, and it's going to catapult gold and silver higher because they're so underpriced after what's happened. So while it doesn't mean it's going to happen tomorrow, it's a very exciting time for us after some pretty rough years.
And hopefully GATA will get some more donations, maybe from mining companies who are more open to this. Maybe the mining companies will actually read the news stories on GATA that, gold and silver are manipulated. Maybe they will actually give you guys some donation money to go out there and help promote the manipulation so the gold and silver prices can start going higher again. The miners can start making some money. But I just want to thank you for your time today, Bill. And how do our listeners subscribe to your newsletter and also find GATA on the internet?
Well, for GATA, they can go to www.gata.org. Again, my colleague Chris Powell does a great job. He sends out stuff to his news list. And Chris just got back from Asia and Singapore and Hong Kong and did a great job over there. And for me, it's www.lemetropolecafe.com, and people can sign up for a 2-week free trial and see if it's of value.
And I would say as well, too, just to help people understand what Le Metropole Cafe and the Midas newsletter is all about, I've been subscribing to it for 15 years. And what Bill does that's unique is that because GATA is almost like a switchboard in the industry, Bill knows pretty much everybody that's anybody in the precious metal space. Half of the newsletter may be just news and things of that nature, but what Bill brings to the table is a lot of his own personal analysis and market commentary, plus all of the great stuff that people send his way on a daily basis. So it's a wonderful free trial. Check it out, folks. I think it's well worth the time, and money is spent. It's a pretty low-cost newsletter, and if you really want to know what's going on a day-to-day basis in the precious metal space, you'd be hard-pressed to find a better newsletter. So unsolicited plug for Bill and his work. You've been tirelessly...
Eric, I'm going to hire you.
Yeah, well, always happy to help, Bill, because you do great work and have had many an arrow still in your back as you walk along this road of fighting against the cartel. So, people need to support those that bring the information that we need. I mean, the powers that be in our entire system of media and so forth is so rancid that if we don't support the people that help us understand the world and make our own decisions better decisions, then, we kind of deserve the hell that we find ourselves in. We need to support good media and support good analysis. So I think it's an unsolicited plug, and I think that everyone should check it out. 2-week free trial. Give it a shot. LeMetropoleCafe.com. And then Chris Powell does great work, too. He puts out those dispatches on a daily basis over at GATA. You can find the link over on the left side, click on dispatches, and you can see Chris Powell's reporting of the news of the day relative to what's important for precious metals.
Now, Eric, one of the most important things I think going on in the markets right now, Turd Ferguson covered this in his chart work over the weekend. He did a podcast on this and also chart, was the strengthening Japanese yen and how it's affecting global markets and asset prices. What do you think a strengthening yen signals now to global markets?
Well, part of what is going on is an unwinding of the carry trade. Over the years, we've had a lot of hedge funds and speculators going to Japan and borrowing because, their interest rates have been artificially suppressed as they have done their macroeconomic swan dive into trying to resuscitate their own country. And when they announced the negative interest rate move recently. Counterintuitively, the yen started getting some appreciation, and people are kind of looking around, scratching their head, and going, "Oh, wait a minute." In terms of macroeconomic theory, you're supposed to typically see interest in a currency decline because of the lesser interest rate that people are going to be compensated by holding bonds, and therefore the demand for that currency. If somebody is owning or coming from a jurisdiction where dollars is their basis and they want to buy some Japanese bonds or stocks or whatever, they're going to translate that into yen to make that purchase. And so, the macroeconomic theory was turned on its head because of this carry trade that's been going on all this time. And now that it's we have that in the context of an ongoing currency war layer to this onion as well. And the central banks are trying to coordinate financial and FX policy, foreign exchange rates and so forth, in addition to having coordination with respect to interest rates. And Jim Rickards kind of jokes that they pass the canteen and take a swig from the currency war canteen in terms of this round-robin competitive devaluations and whatnot that have been going on. But now that the manipulations and macroeconomic management of all of the various policies that policymakers are targeting to try to keep these plates spinning in the air have gone on for so long that things are just not even working according to their plan. I don't think they wanted the yen to go and appreciate as much as it has, and so that's causing some turmoils within the marketplace. And there has been an ongoing correlation with the Japanese yen and gold, and we're seeing that now.
Yeah, Eric, there's been enormous volatility in the Japanese yen. I think one of the winning trades, I haven't done this trade personally myself, I probably should have, is to buy, long straddles and play the volatility in the Japanese yen. There's a currency shares Japanese yen ETF FXY. You can buy options on those at a strike price and do a long straddle, which is buy a put and buy a call. Give yourself, maybe if you're a trader, 6 to 12 months to let this play out. One thing the yen strengthening to me means is that a lot of people who are doing leverage trades in asset markets think the asset markets are going to top or in topping process, and they're going to cash.
Yeah, exactly.
So they're cashing out. So they're going into dollars, they're going into yen, and they're worried about asset markets, volatility in asset markets, and they can't predict whether asset markets are going to go up or down, and volatility is hurting them because they're leveraged, so they want to go to cash and they're closing out the trade.
And let's unpack that for people so that they understand how the mechanics work, the gears. Somebody goes to Japan, they borrow yen, they take the yen, they go to Brazil, they buy Brazilian bonds 3 years ago, and it's in the real because they used yen to execute it. And then when they want to reverse that trade because they think that everything global economic as well as financial markets are high turmoil and probability of going down, they want to go into cash. So they take their position and they'll sell it, and they'll pay back the yen loan that they're carrying on their books. And that because it's temporarily parked in Brazilian real in this particular example is an FX cross where they're buying the yen and pushing the yen up. That's how this works. That's how the yen has been going up recently, to the consternation of the central bank manipulators.
Yeah, and one thing I'm confident about, Eric, is that the yen will not stay flat. These currency markets are extremely volatile, and that's because, the governments and the central banks, the treasury departments of the governments and the central banks are in there trying to manipulate the exchange rates. And it's not just Japan, it's basically every country on planet Earth trying to manipulate their exchange rates to different levels. So, maybe in the short term, the Japanese yen will get stronger temporarily, but, over the long term, there's so many problems in Japan's economy with central planning, with their debt problem, with manipulated interest rates, like you said. They're importing a lot of inflation. They're stagnating there. So, with higher energy prices and things like that, with the yen, problems with the yen, or at least they were last year, that, the yen's not going to stay flat. Either it's going to get a lot stronger in the short term against the dollar, and it's going to cause major problems, and then the Japanese central bank is going to panic and probably do something even stupider than what it's already done, or, it's going to start breaking again. So I very seriously doubt, and that's like why I think, the long straddles for a lot of trades actually work with volatility, because certain markets rarely stay flat. If it's a boring dividend stock, those markets can tend to stay flat pretty much if earnings are predictable and it's like a boring consumer staple, Warren Buffett type of dividend stock. Those stocks tend to stay flat a lot, even if they miss earnings a little bit or maybe they beat by a penny or something like that. But a lot of these other markets, Eric, are just so highly volatile, especially the currency markets. I mean, who would have predicted that the yen would get this much stronger? I think it was on its way to 130 in 2015. It looked like it had broken like 125-ish. It looked like it was going to go 130, 140. And then here we have a humongous amount of strengthening. So I very seriously doubt it's going to stay flat for more than, another month or two. It's going to be extremely volatile going forward for basically all the major currencies, but especially the Japanese yen. Since they've been doing these Keynesian central planning, crazy, quantitative easing, they were the first to do negative interest rates longer than pretty much anyone else.
And it's also, too, something that could conceivably create a global equity market turmoil a couple months out. This full unwinding of the yen carry trade runs its full course. That could be a recipe for disaster. It could be a black swan.
Yep.
Or a gray swan, perhaps better said. We're able to identify it in advance, and it's not exactly an unknown.
Yep. And then it'll be the U.S. government calling up on the phone. It'll be either the Treasury Secretary, Lou, or Janet Yellen, or maybe even the president, telling Japan they need to do currency swaps and start, doing all these crazy things to knock the U.S. asset prices higher again. Now, I want to talk, speaking of, Lou and Janet Yellen and Obama. Yeah, Janet Yellen and Obama, that group. There was an emergency Fed meeting with President Obama. There's a lot of people speculating in the alternative media about it, but the mainstream media, there was only a press release from the White House. Do you think it's then there's so many different things that they could have discussed. Do you think they're discussing all these different things then with European banks and Japan and so many different problems in the global economy?
Well, first and foremost, the base level discussion was probably about the elections and the economy and how things are rolling over. And when you look at even the government stats, with the exception of the BS that comes out of the Bureau of Labor Statistics, everything has been pointing down with very minor exceptions. It's been a cascade of stinky economic statistics, and those are government statistics. And the ability for the powers that be to spin the fact that things are falling down the toilet has gotten to the point where they can't do it. I mean, even Obama, 6 weeks ago, was doing a press conference saying that anybody that speculates that the U.S. economy is not the strongest economy in the world and that the speculation about our economy not being strong is, well, that's all conspiracy theory, was basically the message he was putting out. And that's how desperate the system, for lack of a better way of putting it, is. And so the base level narrative, for lack of a better way of putting it, is in fact what was going on. I mean, there's no doubt that that's part of what those meetings were about. But they were about a lot more than just that. And part of the reason I can say that pretty definitively without necessarily knowing exactly what was going on is because whenever they bring in someone like, foot and mouth Joe Biden, vice president, to be part and parcel of those kind of discussions, what that signifies is that it's not just about economics, it's about national security. And, Biden, and I'm partly, I'm guilty of this as well, Biden has a reputation of being kind of a bumbling goofball and not exactly operating with the full deck upstairs, but it's not really true to say that he's not exactly the smartest tool in the shed. It's more along the lines of he's socially awkward and he does stupid things.
Did you hear what he does to his Secret Service agents? There was a book that came out. He enjoys walking around his house and like going skinny dipping and stuff naked in front of them while they're watching. He's a prankster. Yeah,
he's a weirdo, and he's socially awkward. It's kind of like, you remember back in the day when George Herbert Walker Bush 41, was running for president, and I think it was in '92, and he was talking to reporters at a grocery store, and then they were going through the cash register line, and the laser red barcoder reader was picking up prices, and he's looking at it like, oh, wow, I didn't know those things existed. It's like, the guy's completely oblivious to what average people do, and that's a social awkwardness that can be interpreted as being, a bonehead. But in reality, it's more a reflection of him being an insular elitist who is divorced from the everyday experience of what people know, And so, it's an incorrect assessment to say that Biden is a goofball and that, there's no significance in him doing X, Y, and Z. I'll remind our listeners that Biden was the guy who was doing the hand-holding of Poroshenko, the oligarch who is our installed leader in Ukraine. Biden's son got a cherry-picked deal for a gas deal in Ukraine. I mean, the guy is a major player when it comes to these backroom deals, and he's very much involved when or when frequently involved when issues of international relations and foreign policy come into the picture. And so, that clearly to me indicates that this wasn't just a generic meeting about electioneering strategy and browbeating Yellen to make sure that she didn't get too aggressive with interest rate normalization in an election year such that it hurts the prospects for Hillary Clinton to come in and replace Obama. There's more to what's going on here. I think that we can say that with the prima facie evidence of the way in which these meetings went down, the abruptness by which they were called for, and there was not just one meeting, it was more, and then Biden. So obviously there's more going on here than just the press release level disclosure, but exactly what they talked about is kind of an open question. But I do think that, the stress in the system was the subject of the day, and it happens at a time where we do have a lot of people speculating that there's going to be a really fast change in the marketplace, and this whole news that we were speaking about with Bill earlier in our recording as well too is part of that. So a lot of speculation has been going around the blogosphere right now that this is indicative of something that's going to happen within the next month, and that all the hell is going to break loose and so forth. And I do not subscribe to that view because they do, in fact, plan ahead as best as they can, and what they're focused on, though we don't know exactly what we're focused on, I do believe that it's forward window 6-month kind of planning that they're looking out, recognizing that the equity markets are rolling over. You have stress in the shadow banking system, particularly in Europe, and particularly with these mega behemoth banks like Deutsche Bank and so forth, and that they're trying to figure out how to deal with this picture that's going to unfold in the next year. It's not something that is with respect to, dollar devaluation within 2 to 3 weeks, for example, and a lot of people may be making those connections, and I don't subscribe to that point of view.
Yeah, and I mean, there's evidence out there on zero hedge that we know European banks, things are getting a lot worse, whether it's Deutsche Bank or bail-ins for Austrian banks or, problems with Italian banks. The French banks are bad. There's a lot of German banks besides Deutsche Bank also with problems with bad, base metals and oil and natural gas loans. The other thing is the oil markets are rolling over again. We're having an oil correction again, back to, trend. And so I don't, I had thought, longer term, I am bullish on the oil market, but I thought there was more short-term pain that this oil rally, a lot of it was, kind of a bear market rally, short covering, not necessarily fundamentally driven rally. But there's a lot of evidence now, Eric, that, Zero Hedge just broke that Wells Fargo now has over $30 billion exposure to oil junk bonds. And David Stockman had an article on his website in the last couple weeks that there's actually over $3 trillion in bad oil loans. So I don't know what sources he was citing, but, there's different estimates of how much oil loan exposure. And we have had, I think in 2015, there was like approximately 65 bankruptcies for U.S. oil and gas companies, but most of those were pretty small. We haven't had the really large ones yet that were drastically over leveraged go bankrupt yet, the really massive ones yet. So that could be a huge shoe to drop if we have those in the next couple quarters, and that could be what the meeting was about, because I think, these banks, American banks, are way undercapitalized for bankruptcies for oil and natural gas loans.
Yeah, and the timing of the announcements from, I believe it was Bank of America and J.P. Morgan and at least one other bank. Forgive me, memory does not serve me.
Well, Wells Fargo and Citibank are the ones with the two largest oil and natural gas exposure, I think.
And last week they announced write-downs, and they said that more was coming. And if memory serves, J.P. Morgan in particular announced $500 million and indication that they would probably take another $500 million later this year in the write-down. And, that's what they're disclosing, not what the sheer ugliness of what's in their balance sheet.
Yeah, that's not the stuff they moved off balance sheet, the special purpose vehicles to hide it temporarily or things like that. Because the banks are accounting wizards. The banks knew Enron was, basically running a scam for years, and the banks funded Enron anyway. They probably even helped Enron do the accounting. So, I mean, the banks were using those special purpose vehicles, those off-balance sheet things themselves. So they knew Enron was a scheme the whole time that it was going on. The other major news story I wanted to talk about before we wrap up the show with our couple scumbag nominees was that the Wall Street Journal actually reported, and the story is over on our Wall Street for Main Street Facebook fan page in the last week or two, if you guys want to go look at the story, is that greater than 40% of student loans in the U.S. are in default. So we have a situation here where, a lot of students are graduating college and maybe they have a part-time job or 2 or 3 part-time jobs, or maybe they were lucky enough to get a full-time job, but they're still not able to make all the payments required, those $1,000 a month or higher interest rate payments for their student loans. So we have a lot of kids trying to start a life after college, and, so many people are either they've requested forbearances and maybe some of them have gotten them, or they're not even making payments at all. And there's, I think, a lot of people, Eric, that are involved in the underground economy. So maybe, if you're getting a part-time job, or you're a babysitter or something like that, off the books, you're getting paid all cash, you're not reporting that, so you don't have to pay your student loan bills immediately.
And what is the total debt for student loans now? It's like, over $1.2 trillion, if my memory serves. I mean, it's a huge amount of money. It has doubled in size since the financial crash of 2008 and onward. And I stand by what I've been talking about for a better part of 2 years now. I believe that at some point there is going to be an outright forgiveness of student loans. It'll be mean tested one way or another. They're not going to just, fling forgiveness to everybody. But in this political season, I would expect that the probability of an announcement along those lines within the next 3 to 6 months is very high.
Yeah, it's definitely a huge problem. So bailouts, and they changed the bankruptcy laws. We were discussing this before the show, Eric. They changed the bankruptcy law so students can't discharge it. So it's really messed up. But that's why you have a lot of people trying to come to the Washington, D.C. area, because they know if they can get a government job with their student loan debt, if they can work for the government for 10 years, their student loan debt's forgiven, no matter how much it is. Yeah. So there's a lot of people well aware of that loophole. That's why so many people are moving here. And then they move here and they find out the cost of living here in the Washington, D.C. metro area is arguably the highest in the whole country. So it's a fustercluck. There's just so many things wrong with the global economy right now, Eric. The Dow is going higher, the general stock market indices, but on Main Street we see nonstop factory closures, nonstop store closures and retail shop closures, nonstop restaurant closures and bankruptcies. So there are some chains are doing okay and some are expanding, but it's not offsetting the amount of jobs that are being lost. Well, I want to move into now our scumbag nominee section. I have some funny ones this week. First one is actually Jim Cramer. He's been this guy, by the way, guys. He's not like me here getting. I'm not getting paid millions of dollars like Jim Cramer is per year to put on a show. And Jim Cramer spends his whole time doing nothing but picking stocks, supposedly. But, you know, he's getting paid millions of dollars a year, and he still put his people into 2 companies that went bankrupt. That solar company, I think Sun Edison, he was recommending it all the way down. And then also Energy 21, another oil company. I guess he didn't bother reading the annual report and seeing that they couldn't make their debt payments because they just filed Chapter 11. So that's one major scumbag nominee. I think Jim Cramer is a smart guy, but I think his morals are severely in question at this point.
And have been for decades.
Yeah. Yeah, I mean, there's a video out there about him talking about how he made money as a hedge fund manager. I think he sued, actually, to get the video taken down, or he had a lawyer send a cease and desist letter. But the video basically admits to him, you know, manipulating the market, and basically, you know, he could have been busted by the SEC for it, for admitting something like that, and, you know, nothing happened to him because, you know, he's one of the elites and above the law. But the other scumbag nominees, guys, this one's a really funny one. We have the Los Angeles County Federation of Labor, which led the charge for a $15 minimum wage hike in California, is now trying to get an exemption for employers under union contracts. So we have this union, Eric, that you know, did a huge PR campaign, pushed in the media in California and nationally. We have to have this $15 minimum wage for the workers, right? Higher prices, and then they want nothing to do with it. They want an exemption. How hypocritical is that? It's unbelievable.
I'm waiting for the day when technology can replace the labor mob boss.
Yeah,
that'll never happen, but an amusing thought.
You know, years ago, we wouldn't have seen a news story like this. It's amazing because of the internet, we get the truth coming out. You know, we probably wouldn't have seen a news story coming out like this, that they actually, you know, skirted the fact that they wanted this law and then they want nothing to do with it. So they're destroying the economy in California, and now they want an exemption because they don't want to pay their own employees $15 an hour. It's just unbelievable, guys. My second scumbag nominee is for Bernie Sanders and his lawyers. We have an entrepreneur, someone who's, you know, trying to make a buck. I guess it's a libertarian guy, and he comes up with a creative T-shirt. It's called Bernie is My Comrade T-shirt. You guys should Google it. It's probably a great gag gift for friends. It's a red T-shirt, and it's got heads on it. The heads on it of like Karl Marx and Engels and Stalin and Lenin and Chairman Mao next to Bernie Sanders, and it says Bernie is my comrade under it. Hilarious shirt, hilarious.
And it's all in historical chronological order of, you know, the appearance of these rascals.
Yeah. So you
Bernie
can get
right
the shirt
up front and center.
Yep. So you can get the shirt for like 20 or 20. I think Fidel Castro is also on it. It's like $23 plus shipping for the T-shirt. And Bernie Sanders and his lawyers found out about this, and they sent the guy a cease and desist letter threatening to sue him. So, you know, this is typical hypocritical stuff from Bernie Sanders. It's also come out this week. Bernie Sanders finally released his tax stuff. He makes over $200,000 a year in annual salary. Here's a guy, Eric, that's running on a platform that, you know, the people who make a high salary, the rich, have to pay their fair share, right? Well, you know, he's making over $200,000 a year, and he says he's one of the poorest guys in Congress, but, you know, a $200,000 a year salary, that's really high for most people in the United States. And guess how much his tax bill? Guess what? How much in taxes he's paying?
I don't know, but I would imagine it's massaged lower.
It's a lot lower. He's only paying 13% real tax rate.
Yeah.
So on his $200,000 a year salary, he's only paying about $20-something thousand a year in taxes. So, you know, he's a hypocrite. He's probably not as big a hypocrite as the Clintons or these guys, but he's still a freaking hypocrite. And, you know, he's going to end up, when all this is said and done with how much money he's raised, he's going to end up being one of the 1%ers anyway.
Well, he already is. I mean, and also, too, just as a side note, this whole framing of reality about, you know, and then particularly the left saying, oh, the 1% is the problem. It doesn't take much to be a 1%er in the United States anymore. If you just own a house in Los Angeles or whatever, odds are what you would consider to be a middle-class person, guess what? You're above 1% in terms of your net worth vis-a-vis the rest of the country. And Bernie Sanders, I've seen not necessarily well documented, but nonetheless reportage that his net worth was above $10 million. So he's well into the 1%. I mean, period. There's no two ways about it.
He's hiding his money offshore then, because he released that he says he's only worth like, I think, $900,000, but he only started working when he was age 40. So I mean, he's made a,
and that's working as a congressperson.
Yep. Yeah, that's not doing a real job in the private sector where he could be fired for not, pulling his own weight.
Yeah.
Yeah, it's just unbelievable, guys. He's probably moved money, and I'm sure he's probably, if he hasn't already done so, he's going to be doing it. He's going to be moving money into tax havens too, and he's going to be yelling at people that, oh, you're not paying your fair share, while he hides millions offshore in tax havens. These guys, these Democrats, I talked about this story last time. There's so many of these hypocritical Democrats that just say, the taxes have to be raised on the rich, while, they don't pay any of the taxes themselves. These guys have, all their money hidden offshore and stuff like that too. So the people out there, there's so many people around me in D.C. who agree with Bernie Sanders. It's really unbelievable. Like they're because of the Hillary Clinton corruption stuff, they've switched to the Bernie Sanders train. They're like, oh, Bernie has such great ideas. And then, a lot of these guys are rich Democrats too. There's these rich Democrats here in the area driving around Mercedes and Lamborghinis and Ferraris and stuff like that. And they're not paying the full amount of taxes on their money, and they're hiding it offshore. So they're in public, they'll endorse Bernie Sanders and, tax the rich and stuff. They're not going to pay those taxes.
And on the geopolitics front, he's a complete hypocrite as well, too. There's a public perception that he is more of a dove, and that's total bullshit. I mean, around the edges, he's a little bit more sane when it comes to how he speaks, but, if you look at his voting record, he supported all of our wars for the most part, with the minor exceptions, and he's completely in the pocket of AIPAC, even though he tries to be downplaying that. And, it's a dog and pony circus, our election process and popularity contest, and the level of analysis that most people go through is next to nothing. It's just,
He's also hidden, Eric, how big of a communist he is. I mean, we haven't heard one mention of all these, videos where he's on there from the 1980s praising how good Fidel Castro is.
Yeah.
And all the other communist guys. I mean, his PR team has done a great job hiding all of this stuff. I'm just, if he does win the nomination, he goes up against Trump, I would be shocked then if Trump didn't start playing the videos nonstop then. Trump has I think he has the balls to actually show these videos or part of them during a commercial or something to show people that basically, this dude Bernie Sanders has been hiding how much of a communist he really is.
As we've discussed on the previous Welcome to Dystopia, Bernie Sanders will never be nominated because of the nature of the Democratic convention process. They will whip out their superdelegates, and regardless of how much momentum Sanders gets, he can't win the nomination because the superdelegates will circle the wagons and vote for our psychopath in chief to be, and that'll be Hillary.
Yeah, well, Bernie's going to end up a really rich guy because of all the money he raised. I obviously think, the elections, he has to turn back over the money, right? If he doesn't win the nomination, he has to return the money, or he can keep some of it. I'm not exactly sure with how all the laws are.
I forget how that works as well, but, you spent a lot of the money already anyway.
Okay, great. Well, I think that's enough for this week's show. This is episode number 19. We need more 5-star reviews on iTunes, and if you would like to donate some money, if you enjoy the content, you can go to the Wall Street for Main Street website, and we accept fiat, we accept Bitcoin, and we're going to sign up for a BitGold account, and you can donate a gram or two of gold if you feel up to that as well.
Yeah, and you can even go to D.C. and take Jason out to lunch. He's hungry. He'll take anything.
Hey, actually, I'm eating paleo now. I won't eat anything. So it's grilled meat.
Get him a steak.
It's fresh vegetables. It's grilled meat. It's fresh vegetables and some fresh fruit. I enjoy my. I try to have once a day protein shake with fresh fruit in it and a big scoop of protein powder. So I am eating a lot healthier, and I'm feeling a lot better. For you guys out there that are asking.
But if you shake a T-bone in front of Jason, he'll probably take it.
Especially if it's organic grass-fed steak. Yeah. Or bison. I love bison.
Yeah, there you go.
Bison steak. Yeah, bison is excellent.
Bison
is really
Bison
good.
burgers are awesome.
Bison burgers, bison meatballs, bison steaks. Not as many restaurants have bison steaks, but, occasionally some do. But anyways, guys, thanks for listening to this episode, and we'll be back on again in a couple weeks.